Friday, January 30, 2009. This is the final stock market video for the month of January, and it looks as if we are going to have a losing month pending some sort of weird 700-point rally at the end of the day, which is very, very, very unlikely, as the Dow Jones is possibly and most likely going to be breaking 8,000 either later today or sometime early next week. Okay, so with that being stated, let me first say that I'm not going to be talking about too many fundamentals, all this unemployment news, all these job losses like I'm talking about, business failures, the monetary system failing, of course the credit crunch, all of that stuff. I'm not going to talk too much about it. If you are not familiar with it and you would like to be familiar with it, please send me a personal message and I will help you out the best that I can, but I gotta be assured that most of you at least pretty much are aware of this stuff happening, and that of course the market is just on the verge of a serious economic collapse. We've only seen the start of it. This chart here, I'm gonna update it soon, that was my indication to me that the economic collapse was real. This chart told me that the Dow Jones was gonna fall to 11,000 back in, well, when was this? This was back in start of August of last year. This was telling me that the Dow Jones was going to hit that 8,000, probably even like 7,800-ish or so, which is exactly where it's managed to go. I'm going to put up a new chart very, very soon. I just got to think of which ones to do. Maybe I'll even do a bunch of different ones. I'm not sure yet. Anyway, first thing I want to announce is the job loss situation. I said I wasn't going to talk too much about it. However, what I am going to be doing is I'm going to be taking companies from Google Finance like IBM, Coca-Cola, Google, every big company that's on there, every company with a large market cap. I'm going to put on a spreadsheet how many employees they have, and on a monthly basis check it up and do some calculations to see what kind of job losses are from a month-by-month basis based on that stat. So obviously you can expect that in about a month's time from now. Okay, so now on to this video. I said in my January 14th video that a possible large downturn was coming. The reason why I said it was because at that point in time, 8,400 was a major level of support that for market to have any hope of going up had to hold and go higher. Well, that day it gapped lower and kept going lower, so I knew at that point that the market was probably going to test 8,000. Sure enough, it did. Okay, so it tested 8,000. I know a lot of people, I've seen like a lot of people on here saying things look bullish, and I just don't see how things look bullish even on any of the time frames, whether it's like for a few days, a few weeks, a few months, a few years. Nothing seems bullish for me. I've heard some people say it, but for me it does not seem bullish. It seems completely bearish, and the big key for that was on Wednesday, 8,405 or so. The Dow Jones hit its top, and now we've already came close to 8,000 today. And the one thing that I do know is that previous levels of support, when they are broken, act as resistance, and also in previous levels of resistance, when they're broken, they act as support. But in this case, the support of 8,400 sure enough acted as resistance. So there's a pretty good chance right now that the Dow Jones goes below 7,800, 7,700 before it even goes over 8,410 area. That to me seems safe from the one side to the other. That doesn't mean that's going to happen, but right now that is exactly how things are looking right now for the Dow Jones Industrial Average, as things look extremely bearish right now for the stock market on all the time frames that I'm looking at. Everything just looks extremely bearish. And if, of course, breaking 8,000, there can be some large downturns left. Right now, the 7,950, 8,000 area is going to be a level of support. And obviously, it's going to probably use it as support the first time on this level here that it hits it. But the more times that level keeps getting acted as support, the more times it's going to break, or the higher probability of it that it will break. So if it breaks, there really isn't much left for resistance or support. Maybe around the 7750, 7800 was used as support before its November 21st bottom, but when it hit its bottom, it rallied pretty high after that I can't really say that there's too much support after that outside of its 7400 lows. And then going before that would be going to the 2002 area lows. I'm not too sure exactly those numbers at this moment, but when we do hit that area, I will let you know what that means. Also, I want to point out another good reason, technically speaking, for the market to be falling is my 2-month intermediate term rule. I call these sections, if you will. What I mean by that is the market goes down for 2 months-ish, then up for 2 months-ish in that area, sometimes more, sometimes less. That to me seems like the standard. Going back to January of 08, the market fell, stabilized a little bit, fell again, and it bottomed in March. That was a long bearish run. And then from March until May, 2 months last year, the market had its nicest bull run last year. And from middle of May to the middle of July, 2 months again, the market fell. Okay, so July 15th it bottomed. It topped again on August the 11th. That's less than a month. And then for the rest of that month or so, even over a month, the stock market was in this range mode, which was the conclusion of the 2-month bull run. The fact that it was only able to get a little bit of a gain and not be bullish after its August 11th highs would have shown weakness, and look at what happened after the September ended. It totally fell really badly, and then of course it made its October bottom. I guess the rules don't always apply after a crash, because after the October 10 7800 bottom, it took only a couple days to get back close to that 10,000 mark. Huge dead cat bounce. Excuse me. And then after that, it went down to its November bottom of 7,400. I think that was around November 20th it bottomed, which means 2 months from that could easily take us to around January 6th. That's a month and a half. And we hit what would be a top of about Dow 9,100. Which means 2 months of lower highs and lower lows. So 2 months from January 6th would pretty much bring us to the end of February, maybe even early March. If that's the case, of course, this means that most likely what will happen is we're going to probably test the 8,000 lows, break them, of course. We may not break 7,400 on the first shot. Maybe we'll even find support around 76, 77. Maybe rally for a few days and then break 7,400, and maybe after we break 7,400 and we hit like 7,000, 6,800, some sort of new low, at that point maybe on a technical level we may have some sort of relief for a month and a half or 2 months. But once again, when that point gets there, we'll know more on that point. But based on the fact that for 2 months it's going up and down, this gives me a good idea that the stock market is going to be going down. This means from an investing point, there is some shorting opportunities that are going to be available for those whom are aware of exactly how to do this and aware of good entry and exit points on how to do it, whether you do it on the Dow Jones, the Nasdaq, the Russell, the financials. They're pretty much all going down large right now, and they're just going to probably keep going down large. So that right now is the short intermediate term prediction of where the stock market is going based on technical analysis. As far as the summer is concerned, I'm not going to make any predictions right now on that, because I still even thought at the end of the year that the winter and the spring possibly could have been a little bit of a range mode from around 8,500 to about 10,000 as a possibility. Of course, it broke that support at 8,400. That surprised me at the time, But now that I see it, I mean, the market's not going to do what you want it to do or what you think it's going to do. So that's something I got to keep in mind, and just keep evaluating the messages that you see based on what the technical analysis says and based on what the fundamentals are. Of course, it seems very basic to me to see that every day that I wake up, I'm going to hear more jobless claims. We're going to hear so many financial struggles, so many companies going under, so much of this bailout talk. That is just going to keep on going. You got to keep expecting that, and that to me is the secret or the success in figuring out where exactly the stock market is going to be headed over the next little while. So that's that. The stock market seems like she's going to be falling a little bit more. The Mayan calendar talked a lot about this and how it was going to happen. So to me, there's too many factors stating this is going to happen. So you know what, let's accept the fact that the market has to collapse, accept it. And you know what, if you can enjoy it, you might as well enjoy it, because it's the way it has to be. Yes, of course, there are going to be a lot of people that are going to be losing jobs, and there's going to be a lot of people that are going to be struggling over the next little while. And you can say, yes, that is unfortunate that it is going to happen, but unfortunately there isn't much around this. The elites decided over the last few hundred years that they wanted to implement a money system like this, a socialistic society like this, and because they used the lies that they had, they've got caught in the lies, and now everything has to collapse. So I mean, the best that you can do, of course, is try to be as positive as you can. And of course, if you are having a hard time with money and you got a little bit of money, you can obviously short the stock market and get some finances then. However, I'm going to tell you the key now. The long-term key right now is to, of course, play the stock market correctly and getting in and out at the correct times. And then as you're making money, changing portions of that money for assets. We're talking gold, we're talking silver, food, anything that you think that you can either use or trade to other people for other things. Water, whatever it is that you need. I mean, it's going to be different for every person, so I can't say, I can't say it should be particularly this, but gold and silver seems to be breaking out and doing well. Of course, you got food, that seems to be generic. Water seems to be generic. Seeds for a lot of people, but not for everybody. And so on and so on. And keep purchasing your items as you can. Buy it in lots. Don't buy everything at one time, because the dollar does seem like it's going to collapse, but I can't say when or on the value that it's going to. What I have been doing has been watching the code UUP, which is the United States dollar. It tracks how the dollar is. And it is showing signs of falling, but it doesn't look like it's going to be like collapsing at least until at least the summer. But I'm going to keep you posted on that also. So that seems to be the recommendation there, but just try to stay as positive as you can, accept the situation and do the best you can to survive and be happy during this economic struggle. So I hope that helps you very much. Thank you for watching. Peace and light, everyone, and have yourself a magnificent day, magnificent weekend, and bye-bye, everyone.